Good evening. This is Ken at Tortoise Capital. This is a debriefing from day one of our live trading workshop in Kansas City. It is July 30th, 2018. So I'm try to drive through these symbol by symbol. Realize that a lot of these trades are being done simultaneously, but I'm trying for continuity on these trades. We'll see how it goes. So the first one I'm going to look at just alphabetically, Alcoa around 11 o'clock had a slight upward move that terminated in a sideways quiet channel, which became a Z3P. We had a breakout from Z3, so we got short here with a stop on the far side of the Z3. Let's try and drive that forward. Had success. Took a second position as it neared previous day's close. Previous day's close. Had a reversal. Decided to cash that. I'd gotten in a little early on that second trade, so cash. Stop and reverse long. PSAR flip. We had winter, spring on the MACD histogram. Fractional loss here. So that's like about a minus 0.7 on the execution stop. That's about a 0.3 on the position sizing stop. Stop and reverse getting short. Starting to work. Really starting to work. Cashed here towards the afternoon as we went through the winter back into the spring and approaching the zero line. That turned out to be about 5 execution hours. I think that was it for, that was it for Alcoa. Next up was AXP. The financial sector had been weak all day, but the first time we picked this up was on a Z3P at lunchtime. Broke down below the Z3 line. We had the MACD histogram just cross the zero lines, picking up a negative bias. This one worked right away. Nice. There was a bottoming tail. In retrospect, had wished I had gotten more of that, but I felt like it was still. And then 10 minutes later, financials started to work. The indexes were getting better. Covered. Nice trade. This is one that got away. Zero line here could have gotten in here for a tradable move. Was really regretting it. And that was AXP for the day. So we got one piece of that, but that's one that got away. The zero crossing into the summer. This was a telltale sign. Should have been on this one, so not very well done. Still, we don't mind that trade to the downside. All right, here's one in diamonds. Market opens here. Little gap up, sells off. We were in the summer, so entered with a stopper down around Z2, about 40 cents. Ended up scratching. Pull back. This is winter starting into the spring. Buy this little RLXD pocket. Looks very much like an owl entry. Fractional loss there. So lost the execution risk. Stopped and reversed as we're into the winter. So that was pretty poor. This should have been a scratch, but let my beliefs get in the way. Now the DIA to the south is working. Get an orderly exit here. So pretty good trade, about 90 cents on about a 20-cent initial risk. Re-entered short on a rejection of the zero line. Scratched, stopped in reverse, went long on a crossing of the zero line into the summer. Crossed back into the zero line, so we cashed another about 50 cents on a 20-cent risk. I think that was it for the day. Yeah. Energy sector started weakening around lunchtime, late morning. Missed this bias right here, and missed that Z3 pinch. However, got into the spring and it failed to cross back under its moving, its EMA, so that makes it winter again. So got short with a stop here of about 20 cents. Covered with about 15 cent on a 20-cent risk. And that's a stop and reverse. You can see our stop there. It's down at the Z3 line. Crosses up into the summer, rolls over into fall. Take that nice exit. About another 20 cents on a 20-cent risk, 10-cent risk, excuse me. And I think that was it. This one was not well started. This is EWW, one of our frog champions. I missed the hybrid frog early. Was chasing caterpillar, and span of control didn't allow me. After about an hour, we were in the summer, and then had to cross back over to the upside. Long with about a 10-cent risk. Quickly scratched, stopped, and reversed. This was a range stat move to the bottom. I was looking for the size of the move this could reasonably achieve. So this one can fail as far as the bottom of this. And covered here for a fractional gain. So that's a stop and reverse. Covered for a fractional gain. That's a stop and reverse. That's a second position short. This thing's really starting to work. Really starting to work. Third position short, really starting to work. And covered on a return to the 0 line. So big time win here. And I think that was it. Yeah. So big win in Mexico. Finally got aligned with it. All right, this is Brazil, another frog champion. This is the open. This is the range stat from the high of the day. We get a hybrid frog entry almost immediately. So this thing can get as low as 36 without being crazy. So short and that's a cover and a stop and reverse. That was a scratch, a reshort, cover for a win, re-enter short, scratch, long, fractional gain, Z3 pinch breakout, long with a stop here of about 10 cents for execution. Nice big win. And I think that was it for the day. We're getting close to the edge. Excuse me. This is Facebook. This is just for practice. We were unable to borrow shares, but that was a hybrid frog. Would have been short. Would have cashed around here. Massive. So again, that was just practicing on tech. All right, this is Intel. Intel was especially important to us today. We had looked at the big gap down and framed this up as a swing trade. Big gap, I think, was earnings, and so we were looking at this as being very much in play, a high priority for a hybrid frog with movement right off the beginning. So here's the open. That's the size of the frog box. These are hybrid frog boxes. It opened high, sold off, got short on the hybrid frog, took a second position, then covered. So a two-bagger, stopped and reversed. You can see this is the initial risk. Gets up one hybrid frog, two. In my judgment at the time, I felt like I should have gotten more out of that one. Bailed me out. Then got into a Z3P, so we just went ahead and cashed. I still feel like I stayed in that too long, but that was a hybrid frog type win, so about 30 cents on a 30-cent risk. That's one I definitely missed. You can see the breakout from this long, narrow channel. That breakout into summer, that's a leg I really missed. I mean, that's a 50-cent move. Now, this is the one I did take. So what we had was it went into the summer, into the fall, dipped into the winter, and then started to recover. And we got our pocket entry on the RLXD. You can see the risk. Now it's come, as you see, it's come out of the this Red River out past Z2, still going long and strong. Narrowing into channel. Cashed. I think that was it. So we ended up getting a nice move in Intel this last little piece. So even though we missed this move, or we should have hit it, getting that second piece was good. So the learning point was when you have a nice long preceding move, it dips under and comes right back out of the negative bias back into positive. You're always going to see that as a pocket, and you're going to want to take that, and not waiting for a Z3 breakout, but buying the RLXD, risk at the PSAR, and bang, really nice move. So that risk is about 15 cents, and you go from 47.30 to 48. That's a 70-cent move on a 30-cent risk. On IWM, we picked up this trade here when the indexes started getting weak. So let's try and zoom in on that. So we bought this one like as a pocket leading to perhaps a collapsing dragon. The rest of the market was getting really weak right here. Second position short, and basically scratched that one when it came back up to the zero line. So nice fractional move. Next up was McDonald's. Got a hybrid frog breakout here right after the open, and closed it in an orderly fashion when it rolled back into fall and had the RLXD. That one felt really, really comfortable. So there's like 50-cent risk and about 70-cent capture. Saw this as a pocket when it came back up out of the spring across the summer, buying the pocket with a higher low compared to here. The rest of the market started getting weak, so we just took that one. That's a move of $1 on a 50-cent risk. That turned out to be pretty good. Merck was a pocket entry. We missed the Z3 pinch breakout, pulled back. Again, this is one of those nice long run up, dips back under quick, comes back out of the winter and the spring to recover. So that's a pocket entry there on the RLXD. Had a quick run up. The size of this move was the size of this last move, and so we got the rollover, the P1 on the upside, and just took the cash as it entered the fall. Just to continue a little further though, that was the one. That's another one that got away. Missed this. It should have been on it for the same reason we were on it here. When under winter crossed into summer, should have a long bias here. Z3 pinch breakout and missed another 50-cent move. So not very accurate on that one. Didn't do very well on Nike. This is one where we saw the breakout out of the sideways channel Z3. Took the execution risk loss, stopped and reversed. Basically scratched when it came back above the zero line. Looked elsewhere because we thought Nike had been weak all day, and then missed the owl entry. That's one that got away. This is the S&P. Had gotten into a sideways quiet channel, but with slightly downward tendencies here. We took the Z3 pinch breakout to the downside here, covered for a win, stopped and reversed. And this is just pure inattention to detail. This was a screaming exit, so not very good trade management. Had a lot of other things going on and just missed it. Ended up timing out on this one for a fractional gain, but gave back most of what we had, so not very well done. Alright, this is XLF Financials Hybrid Frog from the open. So there's the open here, and Hybrid Frog box in either direction. Long, one successful frog box up, cash in the usual way. Missed that entire move down. It was such a grinding downward move, and we had other things going on though. So now we get all this time is spent under the zero line. Now we get a breakout to the upside with summer. So we're long here with a Z3 box here, about a 7 or 6 cent risk, excuse me. Stayed with us in a long while, and then just basically timed out. But we made about one execution risk, maybe a little more. Technology, so we couldn't get Facebook, but we could get short XLK. This was a hybrid frog entry, second position, and then had basically 3 execution gains on this one. That was a rewarding trade. So all in all, we had a pretty busy day. We weren't especially sharp on a lot of those positions, but many of those were happening simultaneously, and there's some span of control issues. But we generally got adapted to the directions of the markets. On a day when the S&P was down in a minor way, we were able to tap into some really big movers and get additional positions in with very controlled risk all along the way. And are discovering just how useful this use of the MACD zero line and the crossing of it with the signal lines and how that affects that bias. At this level here, got a couple underneath it, and then when it crosses above, getting that position long was excellent. So pretty good day in the chat room. The live trade videos from inside the room show these kind of in real time on the big screen in the group with some additional lessons learned. So this was just kind of a recap so we could remember the big picture. Hey, thanks for your kind attention, and we will see you in the chat room. What I forgot to mention is was to take a look at the trade stats. So first things first. Basically, we had 32 trades. You can see these were the R multiples of these trades as we went. Now these are all execution risks, and so in general, I'm taking about my execution risk tends to be about 1/3 of the position sizing risk. So really, a 3R win on execution is about a 1R win. So we're going to end up dividing this into position sizing wins by dividing by 3. But you can see that we're controlling risk pretty well all the way through. And so 32 trades, had some scratches near the ends, generating almost 34 execution R's, so about 11 position sizing R's. This was the trade sequencing. The upward sloping regression line means we're getting a little better as we went. At no losses greater than 1R execution risk. Had a number of scratches, and then had a few where we really were fortunate to tie into the intraday move. So the best trade was 4, minimum was 1, about a 0.59 success rate. 1/5 of them scratched, about 1/5 of them were losses. Average win to average loss, a little over 2 to 1. that gave us the cumulative R pattern here. You can see that we settled in on a expectancy of about 1.0, which is really good for me. I mean, normally I'm about half that, but I think we got it. We were fortunate by being tuned into the direction of the markets, and the market itself was fairly orderly at the transition points, and so that made our use of the owl patterns and the four seasons of MACD especially effective today. Today was exactly the kind of day that those things were made for, and so we should have gotten those kinds of results from that kind of day in the market. So we'll just attend to our knitting and stay with our techniques. So thanks for your kind attention.